Let's talk about Japan. Not just the neon lights of Tokyo or tranquil temples, but a nation that's repeatedly reinvented itself on the world stage. For centuries, Japan was closed off from the world, until Commodore Perry's black ships arrived in 1854 and forced the country open. In just a few decades, Japan transformed from a feudal society into a modern industrial power. After World War II, Japan's economic miracle turned it into a global titan. Think Sony, Toyota, Nintendo. But this success led to tension, especially with the US, which was buying far more from Japan than it was selling. This imbalance set the stage for a historic economic agreement that would reshape not just Japan, but the global economy. Japan's history is full of these pivotal moments, like the Meiji Restoration and the US-Japan Security Treaty, where the country had to redefine its place in the world. The Japanese deal we're about to explore is another such turning point, filled with pressure, compromise, and consequences that rippled for decades. It's not just about economics. It's about how a single agreement can change technology, pop culture, and the lives of millions. Understanding this deal unlocks a deeper understanding of the modern world. So, what was this big Japanese deal? Officially, it was the Plaza Accord, named after the Plaza Hotel in New York City, where it was signed in 1985. Finance ministers from the US, Japan, West Germany, France, and the UK, the G5, met to tackle a growing problem. The US dollar was too strong. A strong dollar made American goods expensive abroad and Japanese goods cheap in the US, fueling a massive trade deficit. The Plaza Accord was a bold agreement to weaken the dollar and strengthen the yen and the mark by directly intervening in currency markets. Why target Japan? Because made in Japan was everywhere. Cars, electronics, you name it, and American industries were struggling to compete. The goal: make Japanese goods pricier in the US and American goods more affordable in Japan, hoping to balance trade and ease political tensions. The countries agreed to sell dollars and buy other currencies, flooding the market and driving down the dollar's value. It was a coordinated, unprecedented experiment in global economic management. No one knew exactly what would happen, but the stakes were enormous. The Plaza Accord wasn't just a policy tweak. It was a move that would send shockwaves through the world economy. It was a deal that would change the course of history. And it all started in a single room in New York. Let's see why this happened. To understand the Plaza Accord, rewind to the early 1980s and Reaganomics. High US interest rates attracted global investors, driving up the dollar's value by 50% in just 5 years. This made imports cheap for Americans, but crushed US manufacturers. Exports became too expensive, factories closed, and the Rust Belt was born. Meanwhile, Japan's weak yen made its exports ultra-competitive, fueling its economic boom and massive trade surpluses. The US saw Japan as playing unfairly, closed markets at home, flooding the world with exports. Political pressure mounted for tariffs and protectionism. The Plaza Accord was a desperate compromise: weaken the dollar to help US industry, and avoid a trade war that would hurt everyone. Japan and Europe agreed, fearing US tariffs would shut them out of their biggest market. The G5 met at the Plaza Hotel to rebalance the world economy. Together, not as rivals. It was a high-stakes gamble. The world watched as these nations tried to steer the global economy. The outcome would be felt for decades. Now, let's see what happened next. The Plaza Accord's impact was immediate. Currency markets went wild. The dollar plunged, the yen soared, dropping from 240 to 150 yen per dollar in a year, a 40% shift. For Japan, this endaka, or strong yen, was a shock. Exports became expensive overnight, threatening its economic model. Japanese companies scrambled, cutting costs, automating, and moving production overseas to stay competitive. In the US, exports became cheaper, but the trade deficit didn't vanish. Americans still loved Japanese products. Japanese firms absorbed costs to keep market share, slowing the hoped-for shift in trade. But the strong yen gave Japanese investors huge buying power abroad. Suddenly, Japan was snapping up US companies, real estate, even Hollywood studios. The world watched as Japan became a global financial superpower. The Plaza Accord had triggered a new era of international investment. The effects were dramatic and just beginning. The next chapter? A bubble like the world had never seen. Let's dive in. The soaring yen threatened Japan's exports, So the Bank of Japan slashed interest rates and pumped money into the economy. Cheap money fueled a wild asset bubble. Stocks and real estate soared to absurd heights. The Nikkei index tripled. Tokyo land was said to be worth more than all of California. Companies borrowed against inflated assets to buy even more, creating a cycle of speculation. Japan went on a global shopping spree, buying Rockefeller Center, Columbia Pictures, and more. Tokyo's streets were filled with extravagance. It felt like Japan could do no wrong. There was a belief that Japan's economic dominance was permanent, but the boom was built on speculation, not real productivity. Property and stocks were valued for their rising prices, not their actual worth. The bubble was destined to burst, and when it did, the consequences would be severe. The era of invincibility was about to end. Here's how it all unraveled. By 1989, the Bank of Japan moved to pop the bubble, raising interest rates sharply. The stock market crashed, losing over 60% of its value. Trillions in wealth vanished. Real estate followed, plunging into a long decline. Borrowers were left underwater, and banks were stuck with mountains of bad loans. Credit dried up, and Japan entered the lost decade, a period of stagnation and deflation. Growth stalled, optimism faded, and companies focused on survival, not innovation. Consumers stopped spending, worried about jobs and savings. Government stimulus projects failed to revive the economy, only increasing national debt. The bubble's collapse haunted Japan for decades, shaping a risk-averse society. Lifetime employment faded, and social changes rippled through the country. The Plaza Accord's unintended consequences echoed for generations. It's a cautionary tale about the dangers of speculation and the long road to recovery. The story wasn't just economic, it changed culture too. The Plaza Accord's economic shockwaves transformed Japanese pop culture. The bubble years fueled a golden age of anime and video games. Big budgets led to classics like and the rise of Nintendo and Sega. Japan became the center of global gaming, launching franchises like and. When the bubble burst, budgets shrank, but creativity adapted. Anime grew darker and more complex, reflecting the mood of the lost decade. Game developers focused on innovation and tight gameplay. The cultural seeds planted during the boom continued to grow worldwide. Today, when you watch anime or play Japanese games, you're seeing the legacy of the Plaza Accord. Economic policy shaped the art and entertainment we love. Big deals can have surprising, lasting effects on culture. The story goes far beyond finance. The Plaza Accord didn't just change Japan and the US, it redrew the global economic map. Japanese companies, squeezed by the strong yen, moved factories to Southeast Asia, kickstarting industrial booms in countries like Thailand and Malaysia. This offshoring created complex global supply chains, the blueprint for modern globalization. The trend spread, paving the way for China's rise as the world's factory. Japan's response to the Plaza Accord helped create its future competitors. The deal shifted manufacturing power from Japan to Asia, and eventually to China. The Plaza Accord's ripple effects shaped the world economy for decades. It's a lesson in unintended consequences. One deal can change everything. The ministers at the Plaza Hotel set forces in motion that define the next 30 years. Our interconnected world traces back to that moment. 40 years later, the Plaza Accord remains a defining moment in global economics. It showed the power and danger of international cooperation to move markets, the unintended consequences, a bubble, a crash, and decades of stagnation in Japan. The experience made Japan more cautious and shaped its policies for generations. Globally, the Accord accelerated manufacturing globalization and fueled the rise of Asia. It's still referenced in debates about currency and trade wars today. The Plaza Accord is a story of interconnectedness, how one decision can reshape economies, culture, and geopolitics. Understanding it means understanding the world we live in now. Economics, politics, and culture are deeply linked. The Plaza Accord is a deal still worth knowing about.